Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 24th of November. Starting with that Arrow Exploration, which is here on the basis that, although there's not much of a chart, we see the shares breaking their opening range. Opening range was between, 6.8 pence and let's call it 7.9. End of day close above 7.9. We could see the shares up to 9 or 10. The opening range break for new issues has been quite a rich vein for traders, Ben's Creek, etc., being good, and other stocks in that vein being good hunting grounds over the recent past. On to Gunsynd, which has had a swing to profit, and the shares, even though the company's swung from, I think, a £1 million loss to a £2 million profit, the shares are the same as they were when they were without that profit. So interesting situation now. We've broken that line of resistance from April around 0.9. Ideally, the shares stay above 0.9 and an end of day or a weekly close above 1.05, which is roughly the area of the 50-day moving average, can then take the shares up towards the 200-day moving average at 1.5 pence maybe over the next couple of months, but everything depending on the 0.9 zone holding. On to Galantis, which had news today. Here you can see that the shares have broken a a resistance line there. That was at from late July at around the 24 pence area. Let's call it above 24 pence. We're looking for a return, perhaps up towards support on the way down for the shares, 31 pence in August, something like that over the next 2 to 3 weeks. Itaconix, a name that used to be quite frequent, but is not so much now in this particular sweep. We had a bear trap rebound, but the low back in August around 6.35 and just below that for November. Also bullish divergence as well, so the RSI on this occasion with a lower price a bit higher, so that is a positive. And at least while we're above the 6 pence area, looking for a return to maybe to fill that gap up to 8.5 pence, which was the September gap down over the course of December going into January. But obviously we want to hold that 5.25 pence zone. On to My Health Checked, which has obviously had a rocky ride with the ebb and flow of the pandemic, but it looks like with Europe in chaos, we are just about to break that downtrend line from April around that was around the 2.6 pence level, a weekly close above that, and we're looking towards hopefully retesting August resistance through 4 pence sometime by the end of the year. Stop loss at the moment, the best one, an end of day close back below the 50-day moving average, just under 2 pence. Power Metals is next. Had an exhaustive webinar with Paul Johnson last night, and some signs of recovery here. The big break, though, would be required for the bulls, would be required by an end of day close above the 50-day moving average at 1.84 pence. If we can do that, then maybe we can get back to 2.25 with the area of the 200-day moving average over the next 4 to 6 weeks. But hopefully the shares have finally found a floor. Pembridge is next, and here we can see that the shares have just managed to flick up through that resistance line there. That was from back in May versus the 6.9 pence level above that on an end of day close basis, and we're looking for a partial or even full retest of that May spike that we had towards 12 pence. Big picture target here as high as 14 or 15 pence, which is that well, I suppose the 1 year trend line that we had on the daily chart. So possibly doubling the shares over the next 2 to 3 months, but want to see maybe a bit more action above 7 pence just to prove that that consolidation since May is finally over, but looking quite strong there. On to President Energy, which I've covered earlier this week, and every time I cover it, there's a new spike soon after, at least in the recent past. The view now is that the longer we stay above July resistance at 2.4 pence, the greater the chance of a move up to the ultimate target here, technical target, February resistance line there at 3.2, maybe by the end of next month. Heading into a golden cross with the 200 and the 50-day moving averages both rising, and we've also had a bounce off for RSI 50. Plenty of those actually, neutral RSI 50, which tends to be a leading buy indicator on a technical basis. On to a stock which is not quite so well followed. Tintra, here you can see that the shares have managed to bounce off a line of support there from April, exactly bounce off it at 47 pence. Above that, we're looking towards perhaps the low 80s. That was the sort of the post-August resistance, apart from that spike that we had in October. So 80 to 85 maybe, while we hold above the 47 pence level on Tintra. Moving along to Wishbone, which seems to be in good form at the moment. Here you can see that the shares have also apart from bouncing off that support line from January, which we were hoping for after being very oversold, we're now above the 200-day moving average at just under 12 pence. Above that 200-day line, looking for 14 or 15 maybe over the next week or so, and then who knows, we could rehabilitate the whole move, reverse the whole move down from June. Big picture target here, maybe on a 2 to 3 month view, would be heading towards the top of that broadening triangle from back in December last year. So that's something for the bulls maybe to get excited about. Vertitech, stock which has been was in trouble for much of last year, but here we're just getting up to that sort of neckline resistance area around 5 pence. Want to see a weekly close above that. If we can do that, then it's up to former February resistance just shy of 7 pence. Upside valid or recovery valid while we hold above the 50-day moving average at 4.1 pence. Finishing off with a stock which hasn't so far had a great run on the stock market. Maybe things are going to change now. Here we've got Zenova, a nice gap up here. We had a couple of gaps through the 50-day moving average earlier this month, which was perhaps a sign of a potential recovery. Current trajectory, guessing that we're in a channel heading up towards the 24 pence level, floor of the channel drawn as such, down there at 17 pence. But at least the longer we hold above 20, looking for 24, maybe 25 for the stock, but it needs to break above the initial highs there at 23 3/4 to get that momentum really going after today's news. That's it for me today. More updates tomorrow.